Marriage and taxes as opposed to death and taxes. Mela Garber is tax principal and leader of the matrimonial advisory group at Anchin and joins us today for our Taxes Made Simple segment brought to you by TurboTax. Mela, thanks for coming on.
Good to see you all.
Let's use me as an example. I just recently got married. Why should I file jointly, or maybe I shouldn't?
Well, most couples pay less tax when they file jointly. By filing jointly, they may able to lower the taxes by benefiting from a lesser tax bracket. By filing jointly, they may benefit more from various credits, like a child adoption credit, child's tax credit, educational credit. Sometimes they'll get a better benefit of the charitable deduction. For example, you may know that charitable deductions are subject to certain limitations. By combining the income, the couple may get more benefit of their charitable contributions. Another benefit may be, let's say one spouse has a capital losses. If they file separately, they only can deduct $1,500 of capital losses. By filing jointly, they can deduct $3,000 of losses. Most of my clients file jointly, unless they're a celebrity.
Oh, unless they're a celebrity. That's interesting. So why wouldn't people want to file jointly then, if they're a celebrity or if they're just a regular, everyday, non-famous person?
So some people may not realize when they file jointly, they are both liable for tax liability of both spouses. So if, for example, one spouse have unpaid liability or student loans, that may affect their taxes. Can you imagine if somebody filing return and expecting large refunds, and instead of refund, receiving a letter from IRS saying, well, your refund went to unpaid student loan? That would not help celebrate Valentine's Day in a good mood.
No.
So you have to be cautious by filing jointly.
And know your partner.
Yeah.
Right.
Oh,
Is that for sure?
Know your partner.
That's good
I'd like to
advice
know
for-
about
for
these
everything.
losses.
Yeah, exactly.
there's losses.
Jason,
It's funny. I mean, that's kind of where I was going to go. So I host a podcast called Hush Money, and I talked recently to this woman who had just gotten married, and her husband's finances were a little shaky, and they went to a tax center and sat down to talk about their finances. And when the husband went to the bathroom, the tax guy leaned in and said, "Don't file jointly." He was telling her not to do it. And so that makes me think, what are things that people who are in new marriages might want to be looking out for and understanding about their finances, their partner's finances, so they can make this decision?
So student debt is one. What are some other things?
There are prior tax liabilities, unpaid child support. I think, to your point, is discuss finances early, not before the tax time, all the way before. Get to know other person account. Get to know if they have, for example, cryptocurrency. Who's going to pay the tax on cryptocurrency? Do they have a foreign account?
Gotta let them know about crypto gains.
Absolutely. People don't think it's crypto gains somewhere there, virtual, but the tax are real.
That's right, and it's worth mentioning that the IRS just for this year added a new explicit question about whether you own virtual currency.
Absolutely.
People should disclose it. All right, Mela Garber, thanks for joining us. Mela Garber leads the matrimonial advisor group at Anchin. Thanks, Mela.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.